We're up today. We have Matt Cheslock to talk about the market scoop. Now, Matt, let me get something clear here. We had the bank earnings come in, and I know that Goldman disappointed, but everyone else seems to be doing well. But analysts had a very gloomy outlook for them. What's going on?
Yeah, I think that's helped the banks. The gloomy outlook helped them outperform. What's interesting now is that Goldman didn't drag the rest of the sector down. The other banks were able to beat and have good results after that, which is good. We've seen in the past where one stock in a sector may hold that sector down, but that's certainly not the case here. We've seen some of the major banks have some pretty good runs. A lot of that is predicated on the consumer continuing to be a driving force in this economy, and the loans were good, and that it wasn't the trading side for the most part, which is why Goldman, I think, suffered the most.
Right, and they are expanding into new ventures too as well. I'm surprised to see that Goldman being one of the big leaders, or at least that's what it has been in the past, not drag that sector down. What I am also confused about as earnings trickles in is Netflix and the reaction to that. Matt, they lowered their guidance. How is this stock up right now?
Well, I think they got pummeled last quarter. It seems to be a 1 quarter off for them, 1 quarter down, 1 quarter up. Their international subscribing was good. Domestic was down. I would imagine competition will hurt them regardless of what they say. And I know they downgraded their expectations for next quarter, but I think a lot of that was primarily due to the fact that they want to beat that lowered number. They want to get it out there right now that our numbers are going to be lower. So expect them lower so that if they come in higher, it looks good again. But I think that's the case with Netflix again, is they had such a bad quarter last quarter. Everything was a little bit better this quarter.
Yeah. Now, what do you think about oil? Oil usually leads the energy stocks. Now energy stocks are lower than oil. Why the deficiency there?
Well, you know what? Oil is going through some things right now, whether it's geopolitical. We saw oil try to rally hard after the Saudi Arabia terrorist attacks. That was a 1 or 2 day event, 1.5 day event, really. That sold off a little bit. They're facing environmental concerns now, socially conscious concerns. So you're seeing a lot of money managers maybe moving out of oil when they might have been in. It's been lagging for so long. So it's not it's not giving them a return. And B, the socially conscious millennial does not want to be involved in an oil stock right now. So there is a little bit going on right there. Oil's been such a narrow trading range. It hasn't given you that reason to really invest. So I think right now it's just an unloved sector.
An unloved sector.
Yeah, unfortunately for them.
Well, it's nice to be loved. You're usually good at this. What kind of sector rotation, if you will, or what kind of stocks do you think will pick up in the near future?
What's interesting, we've seen Russell act pretty well, small caps. We've seen the transports act pretty well, and that's based on the broader sector moves again. We're seeing rotation out of certain sectors. Transports were one that were down. The expectations were, based wildly on China trade stuff. We saw the airlines, some of them perform pretty well. Their earnings were good. So the transports have been strong for the last few days, despite a kind of a market that's been either way. So